Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. We're excited today to discuss Schwab Solo 401k Review 2025, why self-directed beats the basic plan every time. If you have any questions or topics, whether on this topic or either unrelated topics, please go ahead and chat that over and we'll go through those questions and topics sequentially. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So again, today we're here to discuss Schwab Solo 401k Review 2025. So the problem with Schwab Solo 401k, really the number one complaint, is that Schwab Solo 401k plan is a prototype plan that lacks certain key features. For example, the primary missing feature based on experience and client feedback is the ability to make Mega Backdoor Roth contributions. It's a very powerful feature. It allows someone to contribute, for example, up to $70,000, where the funds will end up either in a Roth Solo 401k or can even be transferred out to a Roth IRA. But you need to have a plan like the one offered by my Solo 401k Financial that supports Mega Backdoor Roth contributions, even though you can have your account at Schwab. So you can have the plan with us, but the account at Schwab. If you go direct to Schwab, though, Schwab's plan is a basic plan. It's not going to support the Mega Backdoor Roth. And as we'll go through on these slides, it doesn't support a number of other key features. So that's the problem and why a self-directed beats the basic plan every time. So the self-directed Solo 401k is the solution to enable you to have all the features, have your account at Schwab, and achieve all your objectives. What is a self-directed Solo 401k plan? It's a custom drafted plan that is going to allow for greater flexibility, greater investment options. So I think it's helpful to understand that a Solo 401k plan is really a legal entity. It's a trust. So like any legal entity, it's the documents that create it. So when someone opens up a basic Solo 401k plan at Schwab, that means they're getting the documents from Schwab plus the accounts are at Schwab. So what you can do with your plan is going to be dictated by Schwab's documents. But Schwab will also open up accounts that are governed by third-party plan documents. So in other words, you could get your documents from my Solo 401k Financial. Those documents are going to support all the features like the ability to make those Mega Backdoor Roth Solo 401k contributions, but you could still have your accounts at Schwab. Those are going to be free accounts in terms of Schwab's perspective. In other words, Schwab doesn't charge anything to open up the accounts. They don't charge any type of maintenance fee, etc. And please note that this ability is not just for new plans. So even someone that has a basic Solo 401k plan at Schwab can upgrade their plan documents to our documents, take advantage of all the features, but still have your accounts at Schwab. In that case, it would be new accounts at Schwab that are now governed by the third-party plan documents, meaning the ones provided by my Solo 401k Financial, then transfer the cash and assets over from the pre-existing accounts for your basic Solo 401k that you had through Schwab to the new account for the upgraded plan, the restated plan. So now let's start to go through some of those top features that are missing with the basic Solo 401k plan offered by Schwab, but that are available through a truly self-directed plan like the one offered by my Solo 401k Financial. So the number one reason, as we discussed, is the ability to make Mega Backdoor Roth Solo 401k contributions. So just to put some more meat on the bone, Mega Backdoor Roth Solo 401k is really an industry term, or you could call it a marketing term. Really what that entails is a two-step process where one is first making voluntary after-tax Solo 401k contributions to a separate voluntary after-tax Solo 401k account, and then transferring the funds from the voluntary after-tax Solo 401k account either to a Roth Solo 401k or a Roth IRA. The benefits is that you're able to contribute a very high amount, relatively speaking. For example, for 2025, one can contribute up to $70,000 or even more if they're age 50 or older, which is 10 times the amount of what someone could contribute to a Roth IRA. And just like a Roth IRA, you got that potential for tax-free growth. But you need to have a plan, meaning the documents that allows for both the voluntary after-tax contribution, step one, and then step two, the conversion to the Roth. Moreover, you're going to want to work with a provider like my Solo 401k Financial that has deep experience, number one, in helping clients through that Mega Backdoor Roth process. We've helped thousands of customers do it. We're also very hands-on in helping customers open the requisite number of accounts. And we're neutral as far as where the accounts are at. So you can have your accounts at Schwab. That's one of the top brokerage options. So we have a lot of experience in helping you through those mechanical steps of first depositing to the after-tax, then moving to the Roth. In addition, even though that first step of making that voluntary after-tax contribution is not reportable on the personal tax return or the business tax return, the second step of moving the funds from the after-tax account to the Roth, whether the funds are going to a Roth Solo 401k or a Roth IRA, that is reportable on a Form 1099-R. And we handle that 1099-R as an optional free service for our customers. Now, another top use case with our plan, with the self-directed plan, is the ability to invest in alternative investments. So if someone has a basic Solo 401k plan at Schwab, you're going to be limited to your typical brokerage type investments, like a mutual fund, for example. Of course, you can use our plan and invest in those brokerage type investments, right? As I mentioned, one of the top places that customers open up accounts is Schwab, and we're very hands-on. We prepare the paperwork that Schwab requires to open up a brokerage account for your Solo 401k. But our clients are not just limited to those brokerage type investments. In addition, they can invest in non-traditional assets like real estate, like crypto, private equity, pre-IPO stocks, just to name a few. Solo 401k loans, another top use case. So with our Solo 401k plan, the plan allows you to borrow from your retirement account. That's where you're literally taking the funds out of your Solo 401k account. It's not going to be subject to taxes or penalties as long as it's within the Solo 401k limits and documented as a Solo 401k loan. We handle the loan documentation requirements as part of our service for no additional charge. Those limits, those rules provide that the loan is limited to no more than 50% of the balance, not to exceed $50,000, and needs to be paid back in either monthly or quarterly payments, equal payments of principal and interest. The interest is either prime plus 1%, or it could be a CD rate plus 2%, with those payments spread over a 5-year term. So if you have that basic Solo 401k plan at Schwab, they're not going to allow you to take a loan. The documents don't allow it. But you could upgrade the plan to our plan, still have your accounts at Schwab. It would need to be new accounts, as we talked about up above, but still have your cash and investments at Schwab. But now you could take a loan. The tax credits. So with our plan, setting up our plan will make the self-employed business or an individual eligible to claim $1,500 in Solo 401k tax credits. That's $500 per year for 3 consecutive years. And these are tax credits, not tax deductions. That means that it's a dollar for dollar reduction in the individual's tax liability. So those tax credits will more than cover our fees for the first 7 years. We charge $650 as the initial cost, which includes the $525 establishment fee plus the first $125 annual fee. Starting 12 months later, we charge our $125 annual fee, which covers the second year. It's a totally flat fee structure. It's not based on the value of your account. It's not based on the compliance support needed. So that's going to more than cover our fees for the first 7 years. So in order to be eligible to claim these credits, you need to have a plan that includes an automatic enrollment feature. Schwab's documents do not include the required feature. But again, you could upgrade in a basic plan at Schwab to our plan. You could still have your cash and investments at Schwab, but now be eligible to claim the credit, because when you upgrade to our plan, that feature will automatically be enabled. We'll automatically provide the required notices, et cetera, that are needed to make your self-employed business eligible to claim those credits. 5500 EZ support. So once the value of the solo 401k plan, including the value of any defined benefit plan that might be sponsored by the self-employed business, exceeds $250,000, there is an informational tax filing requirement that applies. The name of that informational tax form is referred to as a Form 5500 EZ. Now, Schwab, they will not prepare that 5500 EZ for their clients. They may notify you, but it would be up to the self-employed individual to find someone to help them file that 5500 EZ. Whereas with our plan, we handle that as an optional free service for our customers. We even do it via the electronic filing system to make it easy for the customer. And that'll help avoid potential late fees, et cetera, which can add up very quickly, $250 per day. In-plan Roth conversion and employer Roth. These are just additional ways that individuals can accumulate more funds in their Roth account. The first way is what they refer to as an in-plan Roth conversion or rollover, which entails transferring funds that are already in your solo 401k, but they're inside the solo 401k in a pre-tax status, but converting those to a Roth status. So you can convert with our plan as much or as little as you want. Now, of course, that's going to be taxable. It's going to be reportable, but we handle that 1099-R that needs to be issued to report that pre-tax to Roth conversion as an optional free service for our customers. Going forward, then, all the subsequent gains could be potentially tax-free. So you got that same benefit of the Roth account. In addition, our plan would allow for employer contributions to be made as Roth contributions. Since Secure Act 2.0, employer contributions can be made as Roth contributions. But in order to take advantage of that ability, you need to have a plan that allows for employer contributions to be made as Roth contributions. So our plan allows for both in-plan Roth conversions as well as employer contributions to be made as Roth contributions. Schwab's basic plan doesn't support either. Checkbook control. Now, this is a feature that is oftentimes important to those that may be trying to take advantage of the ability to invest in alternative investments. Because now with that checkbook control, they can access their solo 401k funds quickly to take advantage of investment opportunities. So of course, with Schwab's plan, with their basic plan, they're not going to give you a checkbook associated with that brokerage account at Schwab. Whereas with our plan, again, we're neutral as far as where the accounts are at. Clients will have brokerage accounts at Schwab or maybe Fidelity or another brokerage firm, as well as bank accounts for the same plan. And that's fine. They can have both bank and brokerage accounts. Moreover, even the Schwab brokerage accounts that we help clients set up for their solo 401k plan provided by us, Schwab will even give a free checkbook associated with those accounts. So again, that can be instrumental for those that are trying to take advantage of alternative investment opportunities. Right? It could be a promissory note investment opportunity or a private placement investment opportunity. Flexibility to open up accounts. So as I've alluded to, you can have your accounts for your plan provided by us at Schwab, but you can also have them at other places like Fidelity, like E-Trade. We've helped clients open up accounts at hundreds of different banks and credit unions. Different employer contribution amounts. So just additional customization that's allowed with our plan. So this would apply in a scenario where there are multiple participants in the same solo 401k. Let's say a husband and wife that are both working in the business, both reporting their own earned self-employment income. So for example, let's assume the business is taxed as an S corporation where each spouse receives W-2 wages from the self-employed business taxed as an S corporation. So the employer contribution limit is 25% of the W-2 wages received from the self-employed business taxed as an S corporation. So if this couple were to have their basic solo 401k plan at Schwab, Schwab's plan documents are going to require that each participant makes employer contributions in the same percentage. Whereas with our plan documents, one participant could make contributions at 1%, a certain percentage. Let's assume 25%, say for the husband. But let's assume the wife is not interested in making employer contributions. Let's assume the spouse only wishes to make voluntary after-tax contributions, meaning Mega Backdoor Roth contributions. She could just skip making employer contributions. So set her percentage as 0. And our plan documents would support that, would allow for that customization. Thank you so much for checking out today's webinar. We're going to turn to the questions. If there are more questions, whether on this topic or other unrelated topics, please chat those over now so we can get to your questions. In addition, we would ask you to please like this video. It'll help us to get the word out to other solopreneurs, other entrepreneurs just like you, to the self-employed community that might be looking to catch up on their retirement savings. So that would be very much appreciated. That'd be super helpful. We also invite you to subscribe, whether you're checking us out on Instagram or LinkedIn or X or YouTube. As we go live every day, then you'll get notifications of when we go live. You can hear the content that we've come to share, as well as come and ask questions or hear what other folks are asking. First question, I currently have a Merrill Lynch Edge account. Is this presentation appropriate for me? Yes, the content is definitely appropriate, because if you have a Merrill Edge Solo 401k, which is what I'm assuming here, then you could also upgrade your Solo 401k to our Solo 401k plan and take advantage of all the advanced features that we've discussed. So if you have a basic Solo 401k plan somewhere else, as I mentioned, you could upgrade to our plan. Again, take advantage of the service and features of our plan. Let me know if that doesn't answer your question. Thank you so much for the good question. Appreciate the engagement. I currently have a Solo 401k plan started earlier this year. What would I need to do if I was to start one with you? So the process is referred to as a restatement. It's a super common process where someone might start out with a basic plan somewhere else, then learn of the other features that they don't have with their basic plan. Now they want to upgrade to our plan. So as long as you are continuing to be self-employed with no non-owner, non-spouse, full-time W-2 employees, you can continue to maintain a Solo 401k, but now you can upgrade that Solo 401k. And I think of it as a cut and paste. And it goes back to the foundational concept that I was describing at the beginning of the presentation, which is that a Solo 401k is a legal entity. So like any legal entity, what a 401k is a trust. And it's therefore the documents that create it. So if you have a Solo 401k plan somewhere else, let's say it's a basic plan at Fidelity or Schwab, that means that you have the documents from that institution, let's say Fidelity or Schwab, plus you have your accounts at Fidelity or Schwab. So you could replace those documents with our documents, but still have your cash, your investments at Fidelity and Schwab. It would need to be new accounts at those places because that pre-existing account from Schwab's perspective or Fidelity's perspective pertains to their basic plan documents. But those institutions, Fidelity and Schwab, will open up accounts for third-party plans. So you could upgrade the plan, what they refer to as restate the plan, to our plan. Now you can take advantage of all the service and features, the tax credits, etc., but still have your investments where you want, let's say Fidelity or Schwab. So that means that the plan technically continues. So it's not like you're shutting down the existing plan and starting a new one. It's restated, it continues, but now it's just governed by our plan documents. Hopefully that makes sense. Great questions. Appreciate the engagement. We also invite you to our community. We have over 30,000 members, solopreneurs, other interested parties. There are vibrant forums. There's a library of videos and webinars. So there's a lot of great ways to learn, to engage on the community. It's totally free to join, and you can join easily and quickly at mysolo401k.net/my community. We also invite you to schedule a call, mysolo401k.net/book. All right, wonderful. We'll give it a moment to see if any more questions come in. As I mentioned, please subscribe so you get notifications when we go live. Please like this video, help us get the word out. Thank you. We appreciate your engagement. All right, everyone. Take care. All the best.